in this short TA basics, what we are going to look at is how to trade this particular pattern, because if you go to the weekly, you get to see similar pattern for Bitcoin. It actually does this. Now it's crypto, so you may intermediately get a wick to the downside too. So once you are inside this, either you can trade the range. So say Bitcoin, this is 30k and the top is like 65. You can trade this. Or if you are waiting to get the continuation pattern, now you are waiting for a breakout. So it's not just a breakout, because sometimes it can also be a fake out. So you are waiting literally to break this one, retest this and bounce. So this is your trigger if you are trading that one. And what's your measured move? You now have two measured moves. One is this one. You take this and plot it to the upside. So say this is your target. That's target 1. Now you have the target 2. This is your flag pattern. So this is the pole of that flag. You take this from here and plot it here. So you get something like this. So this is your take profit 2. So that's a continuation pattern breaking to the upside, right? Now, what if it actually breaks to the downside? The scenario changes, right? It's entirely new stuff. So you take that and you plot to the downside. So that's your primary support. Fine. So that's your first support. If this holds, say this is 30k here and 65k here for Bitcoin, then if it actually drops, what you are looking at here is like 24 to 25k. On some exchanges, we have already hit that particular support and slowly bounced back up. We are somewhere close here, right? So that is one support range. What's your next one? That's the different stuff there, because now you're not only looking at this, you're looking at the previous resistance. You have to extend the previous resistance and see whether it's accepting the price. So we reached there. Next one is your support. So you extend that one. It comes towards 22. Now, are we going to go that lower? No one knows. But as we have already dropped this low and bounced, that's great. So this one is your 24, 25k and this one is close to 22, say this is 20. So now these are the different ranges if it happens to the downside. But if the impulse is to the upside, then you most likely will break to the upside. So for any particular pattern which you are following, if your impulse is to the upside and then you happen to correct there, you are looking for an opportunity to trade in the macro direction. Because the pattern can be different. You move up and then the pattern can actually happen to be like this. But this is short-term pattern where you move inside two parallel lines. That's a corrective trend. This is your impulsive trend. So if you want to trade and make a break there, you're waiting for a breakout, retest and bounce. One. So that's your consolidation pattern where you're breaking it out and then you move into that entry. The entry for that trade should be in the direction of the macro trend. So if you're going into the corrective trend, it may hit you out. And if you are trading and you are leveraged, which I never advocate, you should have a stop loss. And keeping stop loss is like saying the exchange, you can kick me out here, welcome, you can take my money. So I mostly don't do that stuff. Now that's completely up to you. So if you enjoyed this short one, hit that like button.